Okay, so we are live now. Welcome to this live streaming session. We intend to go through some very important stuff today, even as it relates to Forex. Yes, we'll be touching on indices as well. We have been having a lot of questions at Generational Wealth Traders, even as it relates to the difference between pips and points. It is the case that traditionally in Forex, we are used to the measure, the movement of price being measured in pips. However, because a lot of Forex platforms also allow, us to trade indices, which is more connected with stocks and shares. We are now also familiar with the use of the terminology points. I started off as a Forex trader, as a stock trader. And, I suppose maybe that's perhaps why I'm used to the use of the terminology points. So we're going to be, seeking to, show us today how to actually work out the difference in pips and points. So, feel free to share this link, feel free to share the links with, those who will be interested in joining us today. And if you are currently if you are watching us on YouTube, do endeavor to hit the subscribe button, as well as the thumbs up, as it were. That would definitely ensure that the stream gets shared widely by Google. Okay. Now, before I go on to actually go into the teaching session today, I do want us to also note certain things, because a question was asked in the on the Telegram channel yesterday, the General Forex community. And in my response, I made it quite clear that it's good to note the difference between points and pips, but it's also good to, and important obviously, to know the actual value, that is, as it relates to what it will cost you to enter a trade. So on the one hand, it's important to know the difference, but it's also important to know the actual value of the price movement. Otherwise, you could end up being a losing trader. Just waiting for more people to join us, sharing this on our different platforms as well. So do share this. Let's give it some minutes for others to join. There we go. I mean, if you're watching this on replay, Then obviously you might want to fast forward. If you're watching this on replay, you might want to fast forward so that you can actually start watching from when or from where we start the actual teaching. We're going to be giving some value, guys, so stay with us. Hang in there. We're going to be giving some value. Right. All right. Play some music in the background. Okay, we'll be starting shortly, guys. We'll be starting shortly. Right. Okay. So we'll be starting in about 2 minutes, guys. 2 minutes. Right here. Okay, so let's go. Let's go. So what the chart I do have on here now is that of US 30. US 30 is basically an index of a number of US companies, 30 US companies. I most likely will be sharing some a screen with you today as to help you even begin to understand this some more. Obviously, we're going to be sharing today what is going to be what is going to bring clarity, as it were. Obviously, there's only so much you can teach during a training session like this. We're going to be here for perhaps about 1 hour or so, or well, less than an hour, and there's only so much we can share. But you can always join our Telegram group, to be able to learn a bit more about Forex, even as it is. Forex is currently becoming very popular now, especially in the last couple of years, dare I say even months, because a number of people are out of work or feel that they do need an extra stream of income, and hence they are actually now in their research online, or perhaps they've been told by friends and family that you can actually start trading from the comfort of your own home, even to generate an extra income. And yes, I have been doing this for some years now. I've been trading actively for about 6 years, but I've been exposed to trading, since 2008, which is quite a while. When I first started trading, I started off as a stock. I started trading in the stock market, but obviously I have moved through various markets over the years, and I've finally, settled, with Forex. So that's basically one of the things I'm going to be sharing with you today. Even the differences between, or some differences between aspects of the stock market and Forex. Now, even as you can see here, just to share some things with you on the chart, let me take, okay, let's leave that. So even as you can see here, I am going to be, taking, some trades today. This is, of course, a demo account. So what I am going to be doing, today is to enter a trade so that you can actually see how some things play out. Now, if you are new to trading, we call this candlesticks. What you find on the chart now, the green and red, sticks are known as candlesticks or candles. The blue and white balls, you find there are our custom indicators. So let me take that off the chart for now so that we have a naked chart, as it were. Let me just take that off. You see, at some point I will be, obviously, my camera is on. At some point I'll be switching it off, just so that I can actually, focus on what's going on the chart. So I will be coming back on with it as well later on. So even as you have it here, this is the chart. We call it a chart. The platform is the MT4 platform, and like I said earlier on, the green and the red stick-like things you have on there are what we call candles. So the green candles is when the price is going up, and the red when it's going down. It does, give us, it allows us allows us interpret or analyze what's going on the chart. So each of these candlesticks represent price. Each of the candlesticks represent price. And there are different time frames. We're not going to be going into the details of some basic stuff, just some aspects of Forex trading we're going to be looking at today. So we do have different time frames. Let's go to the 1 hour time frame. So what that basically means, we have the 1 minute, the 5 minute time frame, the 15 minutes, and the 30, and so forth, up to the the monthly time frame. But let's stick with the 1 hour time frame. And what that basically means is that each candle here took 1 hour to form or to paint on the chart. This is the current candle. It's a live market. That's why you see, those numbers moving. Those numbers basically tell you the current price of US 30. The current price of US 30. So this being the current hour, it means this is the hour we are on now. And as of now, in the UK, it's 8:57 in the morning. 8:57. So it basically means in 3 minutes, or in less than 3 minutes, this candle will be closing and another one will open. As a matter of fact, let's just do this. Let's go to the 1 minute time frame. You'll be able to see the movement better, and just keep your eye on this. You'll see that what's going to happen is, in the next minute or less, another candle will form. Let's just place this here. So that's basically what happens. This candle closes, a new one forms, so on and so forth. Now, even as we keep our eye here, you can see this is the current candle. I have placed this vertical line here, so you will know, okay, you can see now the new one has opened. So what we have here being price, when you see the price, even as it is, looking at here where my cursor is, it basically was moving up. The price was moving up all along, all this time. Let's draw this. So we see here, right from here, the price was moving up. Never mind the the wonky arrow, but that basically was the price moving up. You see, the price moves up and down on the chart, even as we have it. If we're to go back in time, you will see, even as you can see on your chart now, the price goes up and down, just I'm sure like we know when it comes to foreign currency, or when we're trading foreign exchange. So Forex basically is, basically stands for foreign exchange. It is otherwise called Forex. Okay, so let's get to the meatier part of this. Now, I want us to, consider this indicator here, which shows, it currently says 0.0. Now, I'm going to enter a trade soon, and you're going to see that this 0.0 will begin to move. Now, we call this the pip counter, PIP. Now, pips is the unit of measurement, as it were, even in Forex. Pips is the unit of measurement in Forex. When we move from one location to another, distance is measured in kilometers, in meters, in miles, as we know it. But as it relates to price movement in Forex, or in the financial market generally, it is either measured in pips or in points. Like I said earlier on, I believe, in Forex, price movement is measured in pips, whereas in other markets it's measured in points. Now, pips, PIP, basically stands for percentage in point. Percentage in point, or price interest point. Basically it's a measure of a tiny movement in price. Well, not just tiny, but in movement generally in price. So it's percentage in point or price in point. So what I'm going to do now is to basically enter a trade on the US 30, which is an index. The US 30, which is an index. I would also enter a trade in a regular Forex pair. We trade Forex in pairs. I'm sure you've heard of the euro, you've heard of dollar, Swiss franc, and Japanese yen and all that. When we're trading in Forex, we trade them as a pair, as it were, trading one pair against another. So what I am going to be doing now is, to pull up one other pair, a very popular pair, the most traded currency pair out there, which is the Euro USD. The Euro USD, that is the euro against the US dollar. And even as you can see here, that is the current price for Euro USD. That is the current price for Euro USD. Let me just close some of the pairs on here. Okay, so this is the current price for Euro USD, and that is the price for the Dow Jones or the US 30. The US 30, like I said, is a basket or an index of 30 US companies. As a matter of fact, let me just show this to you. Let me show this to you. This would obviously, be beneficial for those who already trade Forex, or perhaps, are interested in trading indices. Okay, I'm going to share this website with you. The whole idea is to give value today. I know there are those who are new to Forex, but there are also those on this stream today, or perhaps who will be watching it later on, who are already slightly experienced. So I want everyone to go away with some value or another. Let me just share that with you. Okay, so this is the website CNBC. For those of you who have satellite TV or some sort of network, you probably know about CNBC. Otherwise, I'm sure you know about Bloomberg. CNBC, in a sense, is similar to Bloomberg in the sense that they provide, financial information. So we can see here, if you were to go to the CNBC website, cnbc.com, you can then begin to look at the various markets here. If you come to the link at the top, which says market, it will pull up, various markets for you, European market, Asian, China, and all that. But then you also have these, links here. We are currently on the chart on the page for the Dow 30, otherwise known as US 30. We also have the one for NASDAQ, made up of 100 companies. made up of 100 companies. You see, I would want you to, do some of your own research as well. Like I always, share with my mentees, a guru would not teach you everything. I mean, I'm not saying I'm a guru, but I am a teacher, a Forex educator. A teacher or a guru will not teach you everything because they want you to actually do some work as well. You will find out, sometimes when you discover certain things yourself, it tends to stick more. You tend to learn, you tend to know it more. So I want you to, basically, find out what sort of companies make up the NASDAQ. Like we see here, NASDAQ 100, which basically means there are 100 listed companies here, 100, listed companies. If you go to the Dow 30 or US 30, there are 30 companies listed there. So do your own research and find out why the 30 why you have 30 companies listed in the Dow and 100 listed in the NASDAQ. Okay, so one of the ways to trade this, we are going to be going to the chart again soon. One of the ways to trade the US 30 is basically to see which companies are moving. If the bigger of the companies there, because obviously there are so many companies, about 30 of them here, some are bigger than others. When some of the big names begin to move, when their prices begin to move, it affects the way the Dow moves as well. So if you have a number of the big companies here, maybe you have their shares dropping, the Dow would obviously then begin to drop as well. So just to look at some of the companies here, we have Apple, some household names, especially for those who are in the States. We have Apple, Boeing, Caterpillar. Well, I know not everybody knows Caterpillar. I know Caterpillar because I used to trade, their stocks. Cisco, Chevron, Home Depot, Intel, Johnson & Johnson, and so forth, Microsoft. So some of the names are very well known. Verizon, obviously, and Visa, Walmart, and so forth, Walt Disney. So these are basically some of the companies. And let's now go back to the chart. So basically, like I was saying, I mean, if you look at this price chart, you will see that some are in the negative, and it shows you when the price is dropping, the percentage a change in price, either if it's going up or going down. I would obviously look into this at some point for those who are members of my trading community, the Generational Wealth Traders. I have held it off for some time because I want to teach it properly and comprehensively. So I'll be looking to do that at some point. I suppose perhaps this is an introduction which everyone is sharing in, not just members of Generational Wealth Academy. But we're going to be looking how to trade indices. There are particular strategies for trading them, apart from some analysis you would do. This obviously, would be fundamental analysis, but there is also a strategy, a very good strategy I use for trading them as it relates to technical analysis when we go on the chart. So let's go back to the chart now. Okay, so here we have the US 30 or the Dow, even as I mentioned a while ago. So what I'm going to do now, just before I even open a trade, it will be good to know this, that we have a lot of Forex brokers out there. And with some Forex brokers, they will let you trade using micro lots. They will let you trade, indices. I mean, when it comes to Forex pairs, regular Forex pairs, they will let you use any lot size you want to trade. Especially if you have, if you have the right amount in there, they will let you trade, using all the lot sizes. But with some Forex brokers, you cannot trade using a micro or a mini, when it comes to indices. They won't let you trade the indices with micros or minis. It has to be a standard lot size, which you could say it's a shame, but by the same token, it's also to protect you. But I will be sharing with you. I'm going to be posting in the Telegram group, a broker you can use, which would allow you trade with some, beautiful, would allow you trade with, with the smaller lot sizes, as it were. And by the way, if you're not part of our Telegram group, that is basically our app of choice. We're not on WhatsApp. Yes, we are on Facebook, but we are predominantly on the Telegram channel. So I would encourage you to join us. As a matter of fact, let me post the link for the Telegram group now. I'll post it there so that you can actually go on and join us. Telegram is becoming popular now, not just for business people, not just for Forex traders, but also for people generally. It's some have switched from WhatsApp to Telegram for all kinds of privacy reasons. That is not within my remit today, but I've just posted it now on the chat there on YouTube. So do join our Telegram group if you're not already part of it. Okay, so let's now begin. Let's begin. I'm just going to, because it's a demo account and it's some training, I'm not going to do any deep analysis. I'm just going to enter the trade. Whether it's it goes against us or not doesn't really matter. We just want to enter a trade so that you get a feel of what we are teaching today. Okay, so let's enter a trade. I mean, this happens to be JAFX. Now, they only allow you trade using a standard lot size from what I can remember. Okay. If you're watching this and you're new to Forex, you might not understand every single thing, but that's understandable. So we can see here what's selected is a standard lot size. I trust you can see there, 1.00, that's a standard lot size. It says volume, but yeah, that's lot size. If I was to change it, trying to trade with a micro, 0.01, okay, I think they allow you. Oh yeah, okay, sorry, they do. There was another broker I was, looking at, I was trying out today when preparing for this, that would not let me trade with a mini or a micro, except standard lot size. So let's just go in the trade now with a micro lot size 0.01. Now, keep an eye on this. This is the pip counter. This is the pip counter. So keep an eye on this. You'll see it will begin to move, or the numbers will begin to increase or decrease. So let's just buy. I'm entering a market execution. Okay, so I've entered that trade now. You can see it says minus 29.7. That is the spread. So the spread for this asset, the Dow, came out at about 27. Was it 27 or 29? Let's just check it here as well. Bear with me. Let's check it here. Okay. Okay, so one of the ways you can actually check the spread is by going on here. If you click on that, if you click on this triangle pointing down, it shows that, you can see the numbers there. We're not going into details in this today. Well, you can see, we are in profit now at the bottom right-hand corner. We're in profit. We went long, which basically means we bought. And you can see we're in profit of, it says 80 there. Now, I'm not going to say anything about that just yet, whether it's pips or points, but it says 80. When we begin to do the calculation, you would know whether it's pips or points. If it was Forex, straight away, you would know that is points. Sorry. Let me not confuse things here. If this was Forex, you know what? Let's enter a trade in Forex as well. Let's go with Euro USD. Okay, so let's go with Euro USD. Let's just use the same lot size. Let's sell this time. Okay. Okay, so with this being Forex, the regular Forex pair, this is minus 0.7 pips. Even if it changes to minus 18, that would mean minus 18 pips. Okay, now it's going in our direction. You can see it's changing. So you would basically just call this pips. When you see the pip counter here, you call this one pip. So you are 1 pip in profit. That is with the regular Forex pair. Okay, so with the US 30, which is an index, it says 20 here, but I will come and explain. So anyway, if you're looking to work out the spread, which is a difference between the bid and the ask. I know I might end up, sharing a lot more than I plan to give today, but, I suppose it would help us understand things better. The way you work out the spread is to subtract the difference, between, these two numbers. You can see here, I've just opened the market watch window. If you want to close it, you click on there like so. If you want to open up the market watch window, you go to view, market watch, or Control M on your computer. So these are the different assets. It's made up of Forex pairs and metals and indices and cryptos and all that. You can see this column here is for the bid, and this column is for the ask. Now, this column obviously shows the symbol for the different assets. I mean, in Forex, they are called tickers, but we call them symbols here, in Forex. So for the difference between the bid and the ask is what we call the spread. Now, like I say, we won't be going into details with that today because we could be here for longer than we plan to. Let's just focus on working out the difference between the pips and points. Okay. So what I'm going to do now, let me turn off my camera so I can focus. But stay with me, guys. Stay with me. Stay with me, stay with me, stay with me. Okay. So looking at this trade now, we entered at, I will pull up the terminal. So this is the terminal, and you can see currently we are we're in a profit of about, 20 and 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 20 a profit of about £1 something. I know for some watching this, you're thinking, oh, is that how little you make in Forex? Is that how little you make in trading? Well, that is because we entered with a micro lot size. Obviously, your lot size should match your account size. This account has over 14,000. I could have entered with a bigger lot size, but obviously this is just training, and we want to keep it simple for now. If I had entered with a bigger lot size, you would just need to add 0 to the end of this. I mean, currently it's about £10. It's about £10. If you add 0 to it, that would be £100. If you add another 0, £1,000. If you add another 0, £10,000. So it just basically depends on the lot size you went in with. So look at this, guys. I know when you see this, some people are going to be saying, whoa, over 100 pips in less than 5 minutes. Oh, well, that's because we are dealing with indices. The figures are big. If you get 100 pips in Forex, well, that's a good one. I could do with that any day. But if you see 150 here when trading indices, depending on your lot size, it could be a big amount. Because even as it is now with the micro lot size, we are currently about 10 pips up. I mean, this is a trade that entered before your very eyes. I'm not making this up. If I enter with a bigger lot size, I could be over £120 up now, or £1,200, or £12,000, depending on the lot size. Now, that is talking about the value of the movement in points. I'm just talking of the value now, the monetary value. Now, coming back to the point or pip count, if you were to consider this in Forex is big, but with indices, it's not really that big. So you see a plus 155 now, plus 160. It's not that big. If it's a minus as well, it's not that big. Whether it's plus or minus, it's not really that big. What matters is your lot size. So the number here, whether you call it big or small, really is subjective or relative. That's basically what I want us to have in mind. Some of you might have seen my chart in the past, and you see, maybe you see over 200 or 300, and you say, wow, this guy is making money. Or maybe you see minus 200 or 800, you say, wow, what a big loss. How is he going to recover from minus 800 pips? Well, if it's an index I'm trading, minus 200, 300 is really nothing. You can come out of that, easily. But okay, let's do some calculations now. Let's do some calculations now. I hope there are some mathematicians in the house. Let's do this. So that is the current price now. You can see that is changing. Let me just highlight that that row. So there are 2 rows here. Because I've entered 2 trades, there is the one for the US 30, which is highlighted. The bottom one is the one for the one for Euro USD. Okay. So you know what? I think we'll start with the Euro USD because that's what we are familiar with. So let's move from the known to the unknown. I'm doing well as a teacher here. You move from the known to the unknown. So let's go back to Euro USD, which is what most Forex traders know. It's currently at minus 0.3 pips. That's fine. So this is where we enter. This is the price at which we entered. That's the price at which we enter the Euro USD. So pulling up my pen there, we entered at we entered at 1.19. $865. That was our entry price. Now that's the current price now. So you can see, the price at which we entered is lower than the price at the current price. Okay. Now the current price is going to keep moving. So I would say to ignore this for now. Just let's focus on this one. We have how many digits after the decimal point? It's 1.19865. We have 5 digits after the decimal point here. 1, 2, 3, 4, 5. This one is known as the pipette. It's a fraction, if you like. Simply put, it's a fraction of the pip. When doing our calculations, we hardly consider the pipette. We tend to focus more on the pips. Depending on the currency pair, you would either have 5 digits or 3 digits. If it's a Japanese yen related pair, you would have 3 digits so you would have 4 digits as opposed to 5. But this being one of the other ones, you have 5. So let's just, strike off the pipette for now and focus on the pips. When this price moves up or down, you say there's a movement in pips. You say there's a movement in pips. Remember a while ago, we did say that, pips basically means percentage in point or price interest points. Price interest point. So when this moves up or down, we say there's a movement in pips. Just like now you can see, we are currently at minus 4.3 pips because the price is going against us. We sold, which basically means we went short because we thought the price was going to go down, but instead the price is going up. So that's why we are in the negative. If we're in the positive, it will be a plus here. So looking at this now, if the price was to go down, continue going down, okay, let's work with minus 4 then. Let's work with minus 4. So if the price was to go down by 4 pips, it means the price would be $1.982. That's not far off from what we have here. You can see it's not far off because the price has gone down by 4 pips. So that's how you will work it out. This is the price at which we bought or sold. The price has now gone down by 4 pips. This is how you work it out. You basically take away 4 from that. By the same token, if the price had gone up by 4 pips, then obviously it will be a different price. It will be 0 here. I mean, obviously 6.6 plus 4 will be 10. So 0 there, carry 1 over to the next one. That will be 9. 9, 1. So that will be the price. So if you minus 4 from the entry price, this will be the amount. if you add it to it, if you're in profit, that would be the amount. So price movement being measured in pips basically means that if it's a minus here, there's a drawdown. The price has not closed yet, so we say a drawdown. We don't call it a loss until the trade is closed. So because it's minus now, we're in a drawdown. If it was plus, then obviously we're in profit. Well, however you want to interpret that. So our equity is up, if you want to call it that. Let's not get too heavy. So that is basically how you work out pips, which is easy and straightforward. That's how you work out pips. Let's move to points. We call it pips. We measure it in pips when it has to do with Forex, and points when it has to do with indices. Okay, so let's move on from here. Okay, so we're now going to go to our other chart, which is the one for US 30. Whee! We're in profit, we're in profit, we're in profit. Okay, so let's do this. Our entry price for the index for Dow 30, US 30, was the entry price was 30,733.49. Okay. Now, if we were to close the trade where it is now, if we're to close the trade as it is now, that would be 30,750. 30,750. You know what? Let's call it 4. Let's make it easy. Let's make it easy to calculate. Let's say if we're to close the trade at 30721.49, what would be the movement in price? So assuming we entered the trade at this amount and we closed it at this amount, the difference would be, again, just like we had with the pips, the pip count in FX, in Euro USD, where we did not so much consider the 5th digit. In this one, you can be forgiven if you do not count the digits after the decimal point. So let's strike that off. Overall, yes, it will matter, but it's a minor difference in a sense. So you opened here, you closed here, the price went down. If you had sold, then definitely you made some profit. That would be 3 minus 1, that would be 2. 3 minus 2, that would be 1. Then obviously we know all that is 0, it does not count. Now, do we call this pips? No, we don't call it pips, we call it points. So this is basically how you would work out points. So your points, like your pips, is the movement of a whole number. Not so much the fraction, but the movement of a whole number is how you work out your pips, or in this case, points. Now let's take note of that figure. so that we can make this relevant as it is. I wish there was a way of pausing that figure, because it's forever changing, isn't it? I'll just take note of 30748. Let's work that out as well. And note, guys, it currently is this figure and it's at 130. 130. So let's see what difference that will make. Because I want us to obviously go away knowing the difference between pips and points. So what I'm wanting us to find out now is when we have our pip counter, which is this, which counts the pips for us, how do we know whether it's points or pips we are watching? We know if it's in FX, regular Forex pairs, it's definitely, if it says 120, then that's 120 pips. But is it what it says in indices? Let's find out. Okay, so let's now use the figure which we had. Let's take this away. So assuming we closed at that amount which we had there just now, how would we work it out? So the figure was 748. That was the figure there. So if the price moved from this to this, how many would that be? What would be the difference? That would be a movement of basically 40. Well, you could simply say 48 plus that. Now, bear with me, guys. I'm sure you know what I mean. So don't. You know what? Let's do it differently. So that I know. In maths we will place the bigger number on top, isn't it? But I'm sure you know what I mean. So basically, the price moved from this to that. 15 pips. Let's just leave it at that. Well, let's see if we can. Okay, yeah. Let's change it so that it's definitely clear. You never can tell who's going to be watching our video. Some people might be used to seeing numbers in a particular way. If you do it differently, it could be a bit confusing. Anyway, that's going to be going too deeply now. Anyway, so basically, if the price moved from this to that, that's 15 points. But guess what, guys? Earlier on, we saw that when the price was at this, it showed 150. That tells us something, doesn't it? It basically means when you see this in Forex, what you see is what you are getting. If it's 155, that's 155 pips. But if you are trading indices, if you see 160 here, that basically is not necessarily 160 pips. Or is it? We are working in terms of points. That's basically the confusion that is out there at the moment. That's basically why I would want it out. I would like to encourage us to stick to pips and points. If you are trading Forex, call it pips. If you are trading indices, call it points. I always encourage my students and mentees to use the right terminologies. If you were to go in the circle of those who trade only indices, and you start using the word points, some of them will understand where you're coming from, what you're saying, but others are going to be thinking, what's he or she talking about? So if you are talking of indices, talk in terms of points. And if you are talking about Forex pairs talk in terms of pips. So because we know the price movement is measured in pips, in points within indices, just call it 15 points. Just say there's been a 15-point move. Now, it so happened that those who designed the pip counter, yes, they've done a great job, but it was designed mainly for Forex, it seems. Because when it comes to indices, you would have to then do some simple, quick calculation. So we saw here a while ago when there was this price movement, it was 15 points, but it was showing 150 there, which basically means times 10. That basically is times 10. So it basically means when on your screen it shows 150, looking at indices now, when it shows 150, it's not 150 points. No, it's not 150 points. To basically work it out, you will have to strike off one of the zeros. So going back now, I know even as I'm explaining this, some people are saying, oh, why just make it, why don't you just, accept it for what it is, or say it the way it is? Why be pedantic? Why do you have to be so particular? Well, I suppose it would help some of us to be particular sometimes. So if we have 150 showing on our chart there, on the pip counter, know that if you are on indices, it's basically you striking this off and going with that and saying it's 15 points. Even if you call it 150 pips, well, have it in mind that it's actually 15 points. And that is basically what I would advise. Okay, let me see if there are any comments. Let me just check the chat if there are any comments. Let's see if there are any comments, guys. I mean, feel free to leave comments there. Feel free to let us know if you have any questions. And do not hesitate, guys. Do not hesitate to hit the subscribe button or the thumbs up. If you are getting value, at this time, kindly hit the thumbs up for me. If you are getting value, hit it only once. If you hit it twice, it's going to undo what you've done. If you are watching this, there are some of us watching this at the moment. Go over to YouTube and hit the thumbs up for us. Let's push this out. This is valuable information we are giving here, because I have seen this lots of times, people being confused as to how to work out pips and points. And guess what? If you cannot work out the difference between pips and points, as a trader, you could be, shooting yourself in the foot, as it were. You could be doing some things wrong, because before you begin to even understand, how much profit you are making or you're going to make, it's good to be able to work out, the pips and points, and of course, work out the value as it relates to the monetary terms. So, I mean, if there are no questions, I mean, that's basically, how far we can go today. We are going to be having regular, sessions like this. We had planned to trade today, but obviously, because it's NFP tomorrow, being Friday, the first Friday of the month, it's not going to be a very conducive environment necessarily to trade. I wouldn't want to put anybody's money at risk, as it were. I wouldn't want to put your account at risk. So that's basically why I am not, trading, with the general public, today. I might take some trades on my own. As a matter of fact, I believe I will be taking some trades with members of my trading community. But with the general public, we want to play it safe. It is the case that, those who are part of my VIP group do understand our strategies, and, they can always fix things. I wouldn't want to enter a trade, with you live, during the live stream, and then we stop the live stream, the trade goes against you, you don't quite then know what to do. So we just want to play it safe. But if there are no questions, catch you again next time. In the meantime, I would say to join our Telegram group, because that's where you will find most information about us. That's how or when you get to know when we are trading live, trading or training live. And we do this, we're going to be doing this, once a week at least, streaming live once a week, on YouTube. So do feel free to join us. And if you have any questions, send me a direct message, and we would see how we can respond to that. Okay, so I am going to be coming off the live stream now, but I'm going to be staying on with members of my VIP. We provide Forex education. The platform or the outfit is called Generational Wealth Traders, otherwise known as Generational Wealth Academy, where we provide, Forex education as well as crypto. We now also do crypto. We are going to be moving to other things. I mean, we talked about, made mention of stock earlier on. We're going to be moving into, stock at some point in the year, stock and Forex and options. Oh yes, it's going to be, the whole basket, because you will find that even as it relates to Forex, one of the ways in which people hedge their Forex trades is using futures and options. And when I say options, I'm not talking about binary options. I'm talking about, options as it relates to the financials and, all whatnot. So we're going to be moving into all that gradually, to make it rounded, as it were, for our traders, to make it a whole lot more profitable. I mean, it's going to blow your mind, even as we begin to move into this, for those who are members already, how it is the case that some of all these financial markets are less risky than others. Some take time to play out, but obviously there's a lot to gain by being a rounded trader, as it were. Okay, guys, I'll be stopping the live streaming session now. For YouTube friends, I do trust you have gained much from this. See you next time.